All right, Dave, we're chatting about Jim Thorne's most recent news article out there, his market insights for June. He's got a number of comments in there about the stuff that's been happening over the last few months, coming out of the States mostly, but what's some of the opening items that he touches on in there?
Well, yeah, what isn't coming out of the States? I mean, every time you read the news, it's something about the States. There's tons of stuff. People are either fascinated or really want to get their comments in. I mean, you look at the latest headlines. What's the opinion of the United States by foreign nations? It's down. It's on an all-time low. All of these types of things. But how does it really impact markets? How does it impact the economy? Things of that nature. So I think, just the change. The U.S. is pushing to bring manufacturing back home, to basically be an economic power within and not be providing any economic power to other nations is kind of the bottom line.
Yeah, I think it was interesting when I read it, thinking back to basically through my school life and even my career, it's always been this conversation about globalization, about how we're all one world and we all work everything's interconnected, and it feels like Trump's trying to pull that back and say, okay, the U.S. is going to be successful if it can do everything in-house. So it's a really big, like you say, a big global shift here, and I think that's what Thorne is touching on. I think one of the other cool comments in there that I'm happy to see is the comments around our new Prime Minister, Mark Carney, and really sounds like he's trying to open up the resources in Canada and make us a powerful nation in that way, because we have a lot of resources that can be used across the world. So I like the comments around Mark Carney and the work that he's trying to do.
And I hope that rings true. Obviously, I'm pessimistic when it comes to our governments. If you think about what else is in that piece, it's the amount of deals that the United States is signing as they go along. Canada signed nothing, not even with our largest trading partner. They might try and go outside of it, go to the Eurozone. They're talking about easing and getting these resources to markets and things of that nature. But yet all of our bills and rules in Canada really prohibit that. So without significant changes there, I mean, it's talk.
Yeah.
Canada should be a resource superpower. I think Thorne's comment really is an aggregation that it seems like every nation is going to, have to revert back to the strength that you have. And that strength, you will be basically is where you're going to make your money and use it. And any excess capacity you have is where you're going to be able to sell to other nations to make that money. Whereas before, it was about getting the cheapest dollar the cheapest input cost for a product and then selling it back to yourself, in essence. And that's kind of ties into this whole thing. And it all ties together, too, with really the U.S. Debt. How are they going to handle this? That's another big part of this newsletter.
Yeah. You're right. So lots of deals being made out there. I think the newsletter touches on a few other cool things. And really, it's a discussion around the Fed and how they deal with interest rates. They've been persistently, I guess, high compared to what they've been in the past. But Thorne seems to indicate that they'll probably stick there. I don't know if he's seeing interest rates being brought down. He believes they should be. But I don't see if he is, I'm not reading into it that he expects them to come down. He wants them to come down.
Well, I think he's always said that they have to come down and they will come down. I think he's a little more pessimistic now. But, I mean, this ties to the American debt. If those interest rates don't get down, your debt's getting refinanced a massive amount. It's a fiscal cliff, and it has to be dealt with, or else, the U.S. could have credit downgraded, things of that nature. So, I mean, it's just like everything in the market. When we're talking about the market in 3-month increments, 1 month, there's always a headwind of some kind. There's always a potential cliff of some kind, and this is what it happens on a regular basis and what we deal with when we're trying to find the right investment mix.
Mm-hmm. Yeah, there's a lot of other stuff in the articles too, talking about demographics. The millennials are now entering their phase of life where they're raising families, buying houses, and they're really becoming economic drivers in the nations. So it's kind of interesting to see, not many years ago we were, everybody was a little bit down on the millennials, that they're, not advancing their lives or their careers. But now we're starting to see that happen as we kind of expected they would. They're going to go out, they're going to have families, they're going to buy big cars, they're going to buy big houses, all the same stuff that has been done in generations before them. But they're doing it at a time that's difficult with higher interest rates and high rising costs. So it's interesting to see that that still is happening and they are pushing the economies forward.
Yeah, I think that's your demographics. What's going to, save us? Potential artificial intelligence. I mean, there was always the discussion that tariffs cause inflation. There's no real evidence of that at this point. So that's going to play out a bit too. So I think, what's the game plan here when you're, what do you do market wise? How do you invest? How do you go forward right now?
Mm-hmm.
Yeah, same. Don't panic. The noise is just getting louder and more intense. And, if you think of it from the media's point of view, the media, was a very select set of people, a group of people, and they now represent a small portion of how people get their news. So there is 9 million people out there who have an opinion and package it as this is the news. There's lots of people who take the news and then reread it and package it as the news. So there's a lot of noise, and I think it's getting back to the simple side of things. Have a diversified portfolio. There's be and stay invested. The more times you're in none of the markets, it's a problem.
Yeah, that paying attention to the very short-term noise of the markets is usually detrimental to portfolios. And I think Thorne does touch that, and he often does that. He's building portfolios, or he's suggesting portfolios that are 6 quarters into the future. So that's a year and a half down the road is what he's suggesting, and he's got a lot of good news stories in there, a lot of good reasons to be invested. So that's typically the stance that we take. So it's a great article. You guys should check it out. You'll find it on our socials, and if you have questions, always reach out to us. Thanks for watching.